decided to start your own self-managed super fund, and that's great. But how are you going to choose the underlying investments within your fund? We come across a lot of funds that have a large proportion of their money invested in cash or term deposits. And the reason for this is generally a combination of being inexperienced investors, not having enough time to do their own research and self-educate, and choosing not to get investment advice. But you really want that money working hard for you all the time, so having the majority of it sitting in cash is no good to you, and you'll run the risk that your money will run out in retirement. So what are the things we need to consider when choosing our investment options? Well, the first one is the concept of risk versus return. Investing is always about balancing the investment return against the risk associated with that return. Take for example shares, which generally provide a much higher return than cash-based investments such as term deposit. But of course they'll be more volatile in the short term, meaning the value can go up and down. So managing your investment risk is key. Bearing in mind of course that taking no risk, and that is keeping it in cash-based investments, may lead to you running out of money. The other key concept is diversification. It's never a good idea to keep all your eggs in one basket. It's much better to have a diversified portfolio across different asset classes, including shares, property, fixed interest investments such as bonds and term deposits if you like. And that way you're spreading your risk across your portfolio, and any impact from an event such as the global financial crisis or a market downturn is then minimized. When you come to us for investment advice, we spend a lot of time educating you on investment risk and helping you establish an appropriate level of risk that you're comfortable with and that's appropriate for your circumstances. And in doing so, we consider a number of factors such as your stage in life, your wealth in and outside super, your investment time frame, and whether you're still working or perhaps retired and need to draw an income from your super. Once we have a good understanding of this, we can then begin to build an investment portfolio around what we call your risk profile, ensuring you get the best possible return whilst maintaining a level of risk that you're comfortable with and more importantly is appropriate to your circumstances. So if you're interested and you would like to know more, please give me a call and let's have a chat about how we can help you. All the best, see you in the next video.